One of the most common topics that people often approach me with is public mutual investment. So today in this video, I would like to share with you some of the most common statements that I get about investing in public mutual. Stay to the end of the video to find out more. Hi, welcome back to Mr. Money TV, your favorite financial edutainment channel, bringing you financial education and entertainment at the same time. So, what are you waiting for? Subscribe to our channel and turn on the notification to get updated with our latest video. And don't forget to follow us on Facebook and Instagram as well. Ever since I graduated from university, I've got public mutual agents who approach me to tell me about public mutual investment. I know I'm not the only one who has met a public mutual agent. In fact, over the years in the financial industry, many have approached me to ask me about public mutual investment. So here are some of the common statements that I hear about public mutual. Statement 1. Investing in public mutual means you're investing in public bank. Since public bank is so big, it can't go wrong, right? Wrong! Investing in public mutual is not investing in public bank Berhad. The only way to invest in public bank Berhad is through buying public bank's shares on Bursa Malaysia. While public bank is the leading bank in Malaysia, it has nothing to do with the fund performance, which is your return from your public mutual fund investment. Public mutual Berhad is a unit trust management company owned by public bank. Just like the other banks, they all have their own unit trust management arm, such as Kenanga have Kenanga Investors Berhad, Affin has Affin Hwang Asset Management, CIMB has Principal. Most banks have their own unit trust management company. Under public mutual Berhad, they manage 147 unit trust funds. When you invest in public mutual, you are actually investing in one of these 147 funds. Your returns are tied to the performance of the unit trust fund you invested in, not the performance of public bank. Whether public bank does well or not has nothing to do with your returns if you are just a public mutual fund investor. And just like any unit trust fund management company, they make money from the fund management fee. The point is, whether public bank is doing well or not has got nothing to do with you if you're just investing in public mutual funds. You gotta invest in public bank shares on Bursa Malaysia. So public mutual fund is investing in the unit trust, not public bank, alright? Statement number 2 that I get is public mutual fund is the #1 unit trust company in Malaysia. Public mutual is certainly the #1 in Malaysia. This is in terms of the total fund size managed among private unit trust company and PRS providers in Malaysia. Public mutual is one of the oldest fund management companies in Malaysia. Therefore, they have also built a strong reputation together with a huge agency force to sell their products and also a strong leverage to reach out to customers through public bank. So how does this being #1 in terms of total fund size managed among private unit trust company help us as an investor? For me personally, nothing. It just tells me that they are big and they have a huge fund managed by them. What matters to us as an investor is what the return or the fund performance is for the particular fund that we have invested in, not the profile of the company or the total asset managed by them, because you only invest in one of the funds. Public mutual has 147 unit trust funds managed by them. As a unit trust investor, you will probably only invest in a number of those funds, maybe 1 or 2 or 3, not all 147 of them. And what matters to you as an investor is the performance or the return of the fund that you invested in. Statement number 3. Public mutual is the best because they are the biggest. Well, public mutual is certainly the biggest private unit trust fund company based on fund size. But are they the best? This would depend on your definition of best. For some, the best means high return in terms of performance. For some, it means good risk management. And for some, it means ethical investing that follows their value. So it depends on your own definition of best. For me, personally, the best unit trust fund simply means a unit trust that can give me the best return over the years. Strong brand name and market share, or even awards. To be honest, doesn't really mean much to me. The returns that I can get from the fund that I've invested in is what matters. It is like investing in a business. What matters is not whether the signboard of my business look good or not. What matters is the return that I can get out of the business. Does it make sense to you? So when we talk about public mutual being the best, I think it's important to judge from the fund performance rather than it being a best brand or best marketing. In my experience, each unit trust management company have their best performing fund. For some companies, they are good in their local equity fund, and for some, they are very good in their Islamic fund, while there are some others who are very good in their Asia Pacific equity funds. So it is important that you, as a unit trust investor, to look for fund that is best for your investment objective. Do not be bounded by just a brand name of the company. Look beyond that and study the performance of the fund based on the objective. And certainly, each fund house will have their best performing funds. So these are the three most common statements that I get when there's a conversation about Public Mutual. Public Mutual is certainly one of the most established private unit trust company in the market today. In Malaysia, in fact, when you mention about unit trust, many people will straight away think about Public Mutual. Kind of like how we will associate Colgate as toothpaste or Pampers as diapers. So anyway, if you are thinking about investing into unit trust, remember, what are you investing in? It is actually a particular unit trust fund, not the whole fund management company or all their funds. So what you need to pay attention to is which funds are you invested in. For example, if you're invested in Public Mutual, it could be the Public Islamic Opportunity Fund. If you invested with Principal CIMB, it could be the Principal Asia Pacific Dynamic Income Fund. If you invested in Affin Hwang Asset Management, it could be the Affin Hwang Select Opportunity Fund. Or with Kenanga, it could be the Kenanga Growth Fund. As a unit trust investor, you need to pay attention to the fund's objective, the fund performance, and risk management to get the best out of your investment. Remember, at the end of the day, company, brand name, and award are just marketing. What matters to you as an investor is the performance of the fund that you are invested in. So that's all about it in this video. If you are a unit trust fund investor, do share with us your thoughts on how you select the best unit trust fund to invest in. Share with us in the comments. I'll see you next time.